is Dr. T. Lakshmi discussing you about the types of the capital in business economics and financial analysis. Capital. So capital is the accumulation of the funds for any business firm to run it successfully for the getting of the profits is called as the capital. Once a business has started, either it's a solo proprietary, partnership, public enterprise, private enterprise, whatever it is, the people has to accumulate the funds to start that particular business. Every rupee spending for the welfare of that business is called as the capital, because it refers the anything that can be used for the productive purpose by the firm or individual. It will be an economical capital or a financial capital. So both are same. Economically means this capital is going to be investing and expecting the profits, and that to maximum profits they are expecting. And that too, it deals with the money and monetary items. So that's why it's an economic or financial capital that entails with monetary funds and investments like equity, debt, and real estates. Not only that one, even the human efforts as well as the societal efforts towards that organization will be called as the capital. But in general, the money or the monetary item which is going to be using for the business activities in terms of the every rupee spending for the business activities is called as the capital. If we see the types of this capital is categorized into fixed capital, working capital, circulating capital, sunk capital, floating capital, money capital, real capital, private capital, social capital, national capital, and international capital. The capital which is going to be investing in the long-term activities of the business is called as the fixed capital. Long-term activities means land, building, plant and machinery, etc. That item, if the organization spends the money, then that will be called as the long-term capital. Not only for the long-term activities, they are also has to spend for the short-term activities. That short-term activities spending is called as the working capital. That is for the day-to-day activities, amount spending is called as the working capital. The amount which is spending for the purchasings as well as for the inventories, management, etc. Again, anyhow, the circulating capital is a part of the working capital only. But for the circulation in the form of the checks, demand drafts, everything they are using for the purchasings and this payments, bills payments and bills receivables, that capital will be called as the circulating capital. And the capital which is going to be investing for single purpose machinery or single purpose activities, then that capital will be called as the sunk capital. And whereas the capital which is using for the multiple activities is called as the floating capital. And the capital which is in the form of the money or the monetary items, then it is called as the money capital. And the capital which is investing into the any mortgages like fixed elements, if they are spending, then that capital will be called as the real capital. And the capital which is spending or acquiring by the private persons is called as the private capital. And the capital which is spending for the corporate social responsibility is called as the social capital. And the capital which is acquired from the country people is called as the national capital. And the capital which is acquired from the international organizations in the form of the foreign direct investment, FPIs, foreign portfolio investments, and foreign institutional investments, FIIs, then that capital will be called as this international capital. Fixed capital. So here the fixed capital, always the capital to the organization will be categorized either based on this acquiring basis or based on the spending basis. So capital, while acquiring, the sources or the methods of acquiring that fixed capital will be either the issue of the shares or the issue of the retained debentures or the retained earnings of the organization, owners' own resources, term loans from the banks and the financial institutions. So organizations, owners' investments will be called as owners' own investment. For example, there are 100 crores required for the organization, and 20 crores of the owner's equity is there in the organization, that will be called as owner's own resources. Equivalent to him, the person who wants to take the risk in the organization, from him, if they acquire the funds, then that way of the acquiring the capital is called as the issue of shares. That is, let us say the remaining 20 crores of amount has taken from the by the issue of shares. So total 40 crores of the funds is acquired, and now the organizations are going to be taking in the form of debt, not apart from this banks. As a shareholders only they will invest, but they won't expect any returns from the organization in the form of the dividend. They will expect in the form of interest rate. So generally, if they are all the shareholders or the owners, they are ready to take the risk. But the debentures won't take the risk. They'll just invest and they'll expect the interest rate, that is fixed income, without any losses or the profits of the organization. That investors will be called as debenture investors, and they will get the interest rate. Assume that the organization has got 30 crores of the funds from that interest rates. So nearly 40 plus 30, 70 crores is acquired. Then the remaining 30 crores, in that 30 crores, 20 crores if they are getting from the loans, long-term loans from the banks or the financial institutions, like any other non-banking financial corporations, an insurance company, leasing finance corporation, hire purchasing corporation, that may provide that another fund to the organization. So that target requirement for the business is 100 crores. In from different sources, they have acquired 90 crores, and still 10 crores of funds are all required for the organization. Then what can they do is they can redirect the profits which they have earned in the previous year. But if it is a first year, if they are initially starting, this retained earnings may not be possible. But once if the organization has started, after 1 year, if they get this any profits, that profits they can redirect that profits to the organization's further capital. That redirected profits are all called as the retained earnings, which is also called as ROI, that is return on investments. Let us say the organization has given redirected 10 crores for the funds for the further next financial year activities. Then that will be called as retained earnings. So from all these sources, the organization will acquire the funds. Then not only the sources of this fixed capital, while spending that fund are also mostly they will spend for the long term activities. That will also called as the fixed capital, like plant and machinery, factory, companies headquarters and office constructions or leasing, computing the infrastructure facilities, communication of the infrastructure facilities, patent rights, copyrights, designing rights. So for all this one, if they spend that fund, then that capital will be called as the fixed capital. So like this, based on the sources as well as the allocation of those funds, if it is based on the long run basis of the organization, which means whatever the sources are all there, they are all investing into the organization for the long run purpose, not less than 1 year, more than 3 or more than 10 years, or for the up to the lifelong of the business they are going to be investing. That investments and the funds which is acquired to the business will be called as the fixed capital. Amount which is spending for the day-to-day activities is called as the working capital. In general, the amount which is spending for the current assets, that is the assets which are going to be using within 1 year, is called as the current assets, like inventory, cash, but not on the property. So just to show you the difference, that one they have given you. Inventory, that is raw material purchasings, invoices, etc. If they are all spending, that will be called as the current assets. And if they not only this purchasing to that one, they need to spend for the day-to-day activities like paying of this wages, rent, utilities, salaries, etc. For that one also they have to spend. That responsibility of the organizations towards the payment mechanism is called as the current liabilities, whereas liability is the responsibility which has to meet by the organization within 1 year span of the time period is called as the current liabilities. And the benefits of the organization will be called as the assets, and the assets or the benefits of the organization which is going to be useful within 1 year is called as the current assets. This difference between these current assets and the current liabilities will be called as the working capital. So that is the short-term debts or the short-term funds which are available with the organization, which are ready to spend for the day-to-day operations. Then that capital will be called as the working capital. The next thing is the circulating capital. In general, the circulating capital is also equals to the working capital, but this money will be circulated from one thing to another thing. So let us say, first the organization has purchasing the raw material. They need have some funds. Then they are all spending for the creditors. Instead of the cash payment, if they have taking on credit basis, then credit basis means they will pay just advance, the remaining amount they will pay later. For that one, the organization will pay payables. Bills they will give to the creditor. Because the person who has given benefits to the organization is called as the creditor. So from this creditor, they have purchased the raw material on credit basis. So and bills has given to this creditor, and these raw materials are allocating for the work in progress. And in the work in progress, they need to pay for the labors, they need to pay the wages, and for the employees, they need to pay the salaries. Afterwards, they will get the finished goods, which will send it for the sales, so that they can give the in that sales also, sometimes the organization has to done the credit sales, which means they won't receive the funds, but the bills will be given by the debtors. So the person who has received the benefits from the organization is called as the debtor. So from that debtor, bills receivables are all there. Once if he pays, then that will be called as the cash. So from these debtors, they will receive the funds, and after lessing the profit, they will pay the bills which has to payable to the creditors. So in all this one, the money which is using for the circulation of the business activities is called as the circulating capital, sunk capital. The capital goods which have only a specific used in production, in producing a particular commodity is called as the sunk capital. For example, a textile weaving machinery can be used only in the textile businesses, textile production only, and it cannot be used in elsewhere. Therefore, it is called as the sunk cost. They may be unable to sell it to the another activities. Even for the printing machineries in a particular office, or also only for printing only they can use, but not for the multiple purposes. They can't use that one. But if we take the example of the floating capital, the capital is which is used for the alternative purposes. So let us say they have the steel, wood, raw materials, etc. that can be used for the multiple purposes. Same steel might be used for this extinguisher kind of the products, wire wool, chain, metal whisk, lighters. For all these ones, they are using this steel. Multiple purposes, they are using that steel as a raw material. Then that the amount spending on that particular products will be called as the floating capital. The next one is money, financial or economic capital. So the capital which is in the form of the fund is called as the money capital, because fund means which is easily countable, either in the form of the currency or in the gold or in the bonds, bills, that is bills, receivables, etc., or the stock, that is a finished goods. It can easy to convertible into cash immediately. That money is called as the money capital. If it is in the form of the land, it won't be called as the money capital, because it is called as the real capital. So that is the assets which is used to produce the goods. So like the farmers uses the assets to produce the commodities, selling of making of selling of the profits, and there the land is the main investment for the uh, farmer. That is called as the real capital. So wealth that can be expressed in monetary items anyhow, but the wealth of the producer is called as the real capital. That is the lands, buildings, go downs, etc. will be called as the real capital. Then the capital, which is the umbrella term of investments or acquiring from the private investors, is called as the private capital. For example, amount which is required, which is acquired from venture capitals, private debts, angel brokers, or from the real estate investors. But they need not to reveal that person's names. They can just say how much of amount has received by the organization. That investors are all called as, that invested fund will be called as the private capital. Social capital, at the time of the spending, if the organization is spending for the welfare of the society, then that capital will be called as social capital. As a part of corporate social responsibility, the organization need to spend some of the funds to the society near to that particular locality of the factory, or to the employees they need to pay, like networking, belonging, or safety precautions, reciprocity, gyms facilities, as well as the any other facilities for the employees, insurance facilities, and citizens' powers, value like living, diversities, participation. Like this, if they spend that capital, that capital will be called as the social capital. The capital, which is in the form of human beings, is called as the human capital. That is the experiences, judgments, education, skills, ability, creativity of the employees is also the beneficiary to the organization. That intangible elements from contributions from the human beings to the organization is called as the human capital. This is about the capital and its types. Thank you.
Like, share, and subscribe. Hit the bell icon for more updates.